Well, good morning, everyone. We'd like to welcome you on a snowy day here across the state of Ohio to Coffee and Grain Markets with Dr. Sin-Kee Lee. As always, we're coming to give reaction. Dr. Lee is coming to give reaction to the WASDE report, which was released earlier this week on Tuesday. And we just first want to acknowledge our sponsors. We want to thank you to OSU Extension, the Ohio Soybean Council, the Farm Financial Management and Policy Institute, as well as our friends in the Department of Agriculture, Environmental and Development Economics. Just as a reminder, we're here for a half hour to take a quick look at the markets on the WASDE market reports. So we'll be moving through this pretty quickly, but just know, as always, if you have a question for Dr. Lee, we will be dropping maybe some things into the chat box as we go today, but they're in the Q&A feature on the bottom of your screen. That is where you can ask some questions. And myself, I'm David Marison, as well as Eric Rieker and Bruce Clevenger are behind the scenes to manage those questions as they come in. So first, I got my cup of coffee, Sin-Kee, so I'm ready to roll. We might as well start out just like we always do, with a quick overview of what was released this past Tuesday on the WASDE report. So good December morning to you, Sin-Kee.
Thanks, David. Thanks for opening this show very nicely. So as we usually do, I want to start from the corn supply and demand. So before talking about the numbers, let me quickly explain the table structure. Or actually, let me talk a little bit about the first impression of this WASDE report, because we got this this Tuesday, and I think there's obviously some good news, especially for corn, and a little bit disappointing news for soybean as well. So I'm going to talk a little more details about it very shortly. So before that, let me talk about this table structure. So the white area here shows all about supply numbers. The gray area shows all demand estimates, and the yellow area shows the estimates of the market balance. So the table shows only the two market years, 23-24 market year and 24-25 market year. But November and December USDA estimates are reported in separate columns. Of course, we will be focusing on the December estimate column, which is highlighted by a blue dashed line. Lastly, the far right column shows the year-to-year change based on the December WASDE estimates. When looking at the supply numbers, there was no change made by USDA from last month, which is not very surprising given this timing. Basically, the large beginning stocks and high yield made corn supply larger than last year. We are having about 17 billion bushels of total supply. That is, I think, just given situation. The key change happened in the WASDE report was actually on the demand. So USDA ratcheted up corn use for ethanol by 50 million bushels from last month's estimate. Also, more importantly, USDA increased corn exports by 150 million bushels from the last month's estimate. This 200 million bushel increase in demand made a significant change in corn balance. When look at the ending stock, the updated ending stock is now estimated to be slightly smaller than last year's ending stock, which is about 1,738 million bushels. And the stocks use ratio forecast is also adjusted down at 11.4%, which is a little bit smaller than last year. Although USDA did not change the season average price, this prediction means a lot about the market fundamentals. So when we actually look at the futures market, this is a 10-minute frequency chart of March corn futures contracts. The chart shows how the corn market has reacted to the WASDE report last Tuesday. The blue bars indicate the number of contracts traded in each 10-minute window, and it corresponds to the left y-axis. The price movement is depicted by the candle chart with the right y-axis. And this is a very typical pattern when the USDA or WASDE report surprised the market. As you can see from the red spike, the market was very busy with the positive news. and the futures price went up by about 4 cents for the first 10 minutes after the release of the report. And I think this picture well represents the corn market sentiments after the December WASDE report. What about the soybean side? So here is actually the soybean balance table. So the table structure is the same as the corn table. USDA basically did not change any numbers from last month except for the season average price. So as you can see in the far right column, most numbers are forecasted greater than last year. Both new crop and old crop soybean supplies are bigger than last year. Demand is also forecasted 243 million bushels larger than last year. But the demand is not really catching up with the supply increase now, and we are expecting about 128 million bushels larger ending stock, which is greater than our 10% of typical soybean production. Obviously, the soybean table is not exciting, but also it is not very common to see the 60-cent price drop without any other numbers changed. So how should we interpret this? In my opinion, this is a reflection of global soybean value depreciation. Although there was no significant market shifts on the domestic side, I think globally soybean is getting discounted again and again because of the big supply, particularly as Brazil and Argentina's strong soybean supply is becoming more likely. The soybean fundamentals seems to be weak for the rest of the market year. Let's check how actually futures market reacted. This is a chart for the March soybean futures contract. Right after the WASDE report, soybean futures price went down by about 5 cents in 10 minutes. After that, there were some price increases mainly because of the supply concern of Malaysian palm oil. Currently, Malaysia, the world's second largest palm oil exporter, is having a weather challenge in palm oil production. This is raising the value of other vegetable oils, including soybean oils. Soybean futures reflected this factor in the chart, but still the soybean market is largely bearish. I might talk about this later, but even like when we look at Brazil's soybean ending stocks forecast, it is predicted to be much higher than the previous market year. So the low soybean price is not an issue that the US is only struggling with, but I think this is kind of a worldwide pressure on all the soybean producers in the market. So just this is a quick summary of the December WASDE. So obviously, the corn demand seems to be significantly better than USDA's initial expectation, mainly because of a good export progress and ethanol consumption. If the new demand expectation is fulfilled, the corn price will likely stay above $4, I think, throughout this market year, and probably in many Ohio like local cash markets can also be above $4 throughout the market year. I could see like some of the cash markets in many counties are kind of having like corn prices like getting above 4. So hopefully this trajectory will continue. In the soybean side, it was totally unchanged except for the season average price down by 60 cents. Globally, weak soybean fundamentals seem to be depreciating soybean values, while soybean and even soybean meal is discounted. Soybean oil has the potential to have the price increased, as I mentioned before. Although WASDE report did not change actually any price forecast for the soybean oil, we are obviously seeing some like increase of exports, and this might actually be, I think, affecting the USDA's season average price maybe in the coming month or like maybe even in February. So we will keep an eye on that for the next couple of weeks.
Thank you. That's an excellent summary. I love when a bear and a bull are around. Just from the side watching this and seeing some of the reaction to the report is pretty intriguing, and especially look, maybe we could start on the demand side first. Now, so we got some demand, the demand estimates you showed beautifully there. Are there any silver linings that you want to talk about when it comes to demand before we dive deeper maybe on the other side of the equation?
Yeah, because I kind of try to keep like keep trying to find some like bright spots in the market.
That's what
And
we want, bright spots. We want bright
yes.
spots.
Yes, because we all know, I think this large supply is really suppressing the market sentiments, and we really need like then where the good news is coming from. And let me talk about the corn side first, I think, because this is easier case for this month. So first, I think corn domestic demand, especially this ethanol, as we saw previously, the USDA projects a strong corn demand for ethanol. In fact, according to the Feed Outlook report, which was released just yesterday, the first quarter corn use for ethanol in this market year was the highest since 2017. So, and the report also pointed out uh, that part of it was due to the ethanol exports. This graph actually shows the monthly ethanol export, and we can see it is remaining at a relatively high level. But one thing to note here is about 40% of our ethanol exports are shipped to Canada. So although I don't think it is very likely, but if we have trouble with Canada in terms of trade policies, the trade dispute can possibly cut down the ethanol-based corn demand. So obviously, this is kind of coexistence of opportunity and risk. But we will see, because to me, I think currently all the price movement is basically first reflecting the fundamental changes. Then I think policy like discussion is coming like after that. So I'm kind of trying to focus on like how this fundamental is shifting like along the time. What about the trade? I think the trade is, I think, the a little bit bigger parts nowadays really supporting the demand. So I want to talk a little bit about it. So probably uh, this is the major booster, and I think everybody can easily understand like, what's happening in the trade side. So when you look at the red line here, we have made a great headway for the past few weeks in our export progress. And the December WASDE report predicts our final corn exports uh, slightly larger than like what we had in 2021. If this is the case, we will be making the second largest corn export in our records. So this is actually pretty supportive news for the corn traders in the market. And if we look at the country specific export progress, we can actually check this graph. And obviously, most trade partners, especially I'm listing the top 6 US corn buyers throughout this market year. Mexico is the number 1, Japan is number 2, and I think Guatemala is number 6. And of course, there's unknown, which is purchased by a multinational company, and they are not usually designating the destination yet, so it is unknown. And all these bar charts are corresponding to the left y-axis. All these narrow blue, tiny blue bars are corresponding to the right y-axis, which is really like showing the corn export sales for each country. Um, Obviously, most trade partners purchased much more than last year. Mexico is the number 1, and we see like it has purchased almost about 600 million bushels for up to today. So probably I think this is really now uh, kind of well representing how our export territory is changing, because we are not now seeing any, I think, even like there's no actually China shown up in this chart. And actually, this is the first time since 2020 that China has disappeared in this graph. And surprisingly, when I actually checked the raw data, China so far purchased less than like 1 million bushels from the US in this market year. I think still like China it will purchase eventually quite a bit of U.S. corn through this unknown channel. But anyway, this is a pretty, I think, surprising move. Speaking a little more about Mexico, according to the USDA feed outlook report, which was also released yesterday, drought in northwest Mexico is expected to severely lower the Mexican corn production. The current active purchase of Mexico is partly due to last year's 10-year record low corn output. If the drought situation continues in Mexico, probably Mexico will keep purchasing a large U.S. corn. Of course, trade and tariffs are always hard to predict, but I think we should read this market move with, I think, optimism. Maybe I would say cautious optimism, because anyway, if Mexico is kind of keep struggling with its own like production issue, then probably even through the next market year, Mexico will be the largest customer in the U.S. corn export market. When we are looking at the soybean side, the chart actually shows the domestic situation, especially soybean crush and crush margin. According to this oil crop outlook report, which was released yesterday, the current pace of soybean crushing implies nearly 7 million bushels of soybean are crushed every day, and this approximates 80 to 90% of the crushing capacity being used now. So at least in the short run, it seems there is not much room for improvement in the domestic soybean demand, because we are actually using almost like all capacity for the crushing. The current bear market for soybean is, of course, not because of weak demand, but because of exceptionally strong supply. So let's look at how our soybean export is doing. So here, like our soybean export has progressed during the last few weeks. Good news here is at least our export is expected to be better than the previous market year. However, given the finer export prediction, 1,825 million bushels, the USDA seems to be very skeptical in our soybean export progress in the second half of this market year, mainly because of the competition with Brazil and Argentina. When you look at the country-specific soybean exports, soybean export improvement was mainly driven by the EU, Egypt, and unknown. China is continuously reducing its dependence on U.S. crops, and this is also captured in the soybean side as well. I think China will eventually purchase more U.S. soybeans through the unknown sales, but this amount will vary a lot depending on how attractive Brazilian soybeans will be next year. Probably it is a good time for us to think about redesigning our export sales channels as the disconnection with China is becoming clear. I think these are a little bit like long, but anyway, this was the end of my answer to your demand question. I think hopefully this is showing a little bit of silver lining, but anyway, still I think I also highlighted some of the risks coexisting.
Yeah, Sinki, there's a lot to unpack just in what you're there's a whole presentation itself, just looking at the things that are happening. And I'm sure that you and Dr. Sheldon are going to have some great conversations as we move into the new year. And when you're looking at demand and supply and demand issues, especially as they relate to trade policy that might be implemented as we move into the next administration. So some fascinating stuff there to go forward. But we always talk on these, Sinki, also about what's going on in Latin America when it comes to production. So you haven't mentioned anything about that. Is there anything that you want to update us there? Any factors that we should be paying attention to there?
Yeah, I want to actually share some of the Brazilian production estimate, or Brazilian actually balanced number shared by the USDA. So this is actually just I constructed the table based on the USDA numbers, but USDA kept its Brazilian production estimates the same as last month for both corn and soybeans. the table structure is more or less the same as what we have seen before for the US side. But anyway, this is all the Brazil prediction. So Brazil is expected to produce 197 million bushels more corn than last year and 588 million bushels more soybeans than last year. Here, what I want to highlight is actually the ending stocks. Brazil's corn ending stocks are expected to be much lower than last year, about a 60% drop. This supports our kind of cautious optimism about the corn fundamentals, even in the global scope. So probably, I think this is kind of lending support to our positive view for the corn side. But when you look at the soybean shows a whole different story. The mass Brazilian soybeans will have to be exported, and still Brazil will also likely have about 20% higher ending stocks than last year, according to this estimate. So obviously, like, so Brazil is, even like when you look at the Brazilian like domestic crush, domestic total, they are like even like getting smaller, like smaller than last year. So obviously Brazil is heavily relying on its soybean use by export channels, and still like Brazil will likely be suffering from the high ending stocks. So I think the supply driven bearish market in the soybean side will likely continue, not because just this is driven by a single country, but all the large soybean exporters in the global market all produced really well in this market year, or likely produce well in this market year, and all this combined and making this bearish market. For the interest of time, I don't want to talk about the world corn production and world soybean production numbers, but you guys will be able to find these slides on the Farm Office website. So I think that's just like what's happening in the world corn and soybean production side.
Yeah, as a soybean producer, I'd be sitting here looking for some silver linings, Sinky. As we look forward, that's what maybe were there any wild card thing out there as we're looking forward? What's some wild cards that you got in your deck of cards here for us that we might need to be paying attention to?
Yeah, probably like I'm always like try to be the person like first like kind of warning some types of risks like over the horizon. So probably first and foremost, I wanna actually highlight strong dollar. So this is actually a chart that just like exchange rates across several other countries, including like Euro, Chinese yen, and Canada dollars, Korean won, Mexican currency, and Brazilian currency. And actually, last November was the first month that all major currencies became weaker than early 2021. And I think, as you can see, as I highlighted in this in the far right of this chart, like you see all these like lines are kind of showing some of the upticks. So meaning that US dollar is getting stronger across the board. And currency depreciation of Brazil, Mexico, China can, I think, be especially negative on our grain exports. So this is, I think, what we really like keep an eye on. Of course, this is a consequence of really macroeconomic conditions and Fed's monetary policy. So all things are really like just convoluted and made this outcome. But anyway, like its impact on on our export activity will be pretty obvious. If everybody has the same level, I mean, every other like competitors are just charging the same price, and our customers' purchasing power are the same, but if we are the only seller who are trying to charge higher price, then our products will lose the competitiveness. So that's actually what we have to worry about, given this strong dollar down the road. Um, of course, I think global uncertainty is also attributing to this strong dollar situation. And I also listed a couple of wild cards. This text colored in red, they are more related to market fundamentals, and text colored in blue, they are more related to policy like oriented views, so discussion. So I think first thing is, of course, I think I mentioned this even in our October coffee and grain talks. Competition with Brazil and Argentina is going to be the key, especially in the soybean side. And Mexico's drought, as I mentioned before, this is going to be one of the, I think, factor that will be actually kind of expanding our uh, export progress potentially. So we will see how bad their outcome will be. So then, depending on that, we will actually get a little more room for the demand from our side because of the exports. Um, and tariffs on especially Canada and Mexico because they are so crucial like trade partners for us. This discussion will be, I think, very critically playing a role in our market prospects down the road. So that's one thing. And I think I picked this Indian push toward corn-based ethanol last coffee and grain talk. But anyway, I think this is something that is really changing the Asian soybean oil, corn, all this like grain side territory because India is used to be the largest corn exporter in Asia, and now it is becoming a net importer of corn because of their strong push of the corn-based ethanol. So given that, I think there might be some room for our additional exports. I think both corn and soybean, especially I think given the Malaysian situation, even the soybean oil uh, demand will be higher globally, and uh, still I think we will also have some maybe side effect, especially like positive like benefit, indirect benefits can come from this like Asian situation. So probably I think this is really like important time to think about how we can kind of strategize our like trade partner networks because now I think really like China is really disappearing from our like key network. Then probably we will really need some other key trade partners and channels. This may not be really like huge giant customer coming to our network, but maybe we may need to add more like smaller customers who can show some sustainable demand like in both corn and soybean. I think that will be probably some like good policy discussion that we have to like talk about. But anyway, I think that's one of the wild cards I wanted to mention here.
Taking a baseball term, you say we need a lot of singles going forward, and not a big home run, but a lot of singles going forward. Lots to think
Exactly.
about. And lots for producers. Just a reminder of how critical it is to keep on top and sharpen those grain marketing skills. We're going to pause right here to give people some time to, if you have any questions for the attendees online, if you want to drop them into the Q&A box, we'll look at that. But why we're waiting for a few questions there, Sinki, going to let you grab your breath there, and I'm going to invite Bruce Clevenger to talk about a program that you are one of the three major instructors for, that's coming up as we move into the new year to help producers with their grain marketing skills. So I'm going to ask Bruce if he wants to jump on here and give a little plug for that, because I know registrations, not many spots left, right, Bruce?
That's right. Sales are going very well. So last year we sold this workshop out. It is called the Basics of Grain Marketing Workshop. This is sponsored by Ohio Soybean Council, also the Ohio Corn and Wheat checkoff dollars. Both those checkoff organizations are supporting this workshop to happen here in Ohio. The Basics of Grain Marketing Workshop was held last year. We're going to hold it again. I should say last year, but actually it was this year. It was February of 24. That was a while ago, but here we go. We're going to roll the calendar forward. January of 2025, we're going to have this workshop again. January 16th and 17th, we're going to be in Urbana, Ohio, which is in Champaign County. This is an in-person 2-day workshop, hands-on, lots of activities, lots of learning, and our registration is available. I'm going to drop that link into the chat once I get done speaking here. It's a pretty simple URL. But a couple of observations I've made while people are calling with some questions about registrations. I picked up 3 things that people are talking about, why to consider taking a Basics of Grain Marketing workshop. First one is sharpening those basic skills. And then not just sharpening and getting those reminders of how the basics work, but also then applying those skills into action. And that is part of what this workshop does. We're going to develop a farm level grain marketing plan. and also intertwine that with other risk management strategies for these narrow margining times of year. The second observation I've made is that we've had some farms that have some grain marketing experience, but they also have a new farm manager, the next generation that's coming onto the farm, and it's a way for the experienced and the new manager to go to a workshop and learn the basics together and then apply it. How does this work for us on our farm? That's the second observation I've seen. And then lastly are those that are entering the industry here in the recent number of years. And so we've had some easier marketing opportunities in the last 3 prior years as far as price opportunities. But now as things tighten and the different outlook on price points, the new to the grain farming industry clientele are looking for those basics of grain marketing. So it's some notable deadlines. One we'll mention, it really relates to the block of hotels that we have secured in the Urbana area. That deadline for that block hotel is December 15th, which is actually Sunday. So some time yet to take advantage of that block of hotels there if you're planning to stay overnight, over to that 16th and 17th. But then the registration deadline is up until January 3rd. So January 3rd is the registration deadline for the overall workshop. So more information on this URL that I'll drop in the chat box, and happy to take those registrations because we, out of the 50 seats we have this year, we have just met our 30th paid spot. So a few more seats available. Looking forward to having those filled here by January 3rd. Thanks, David.
And it may be gone by January 3rd. So maybe put it on your Christmas shopping list to do here in the next week or so to get enrolled. Just wrap that gift certificate up for your farmer in your life, your grain marketer in your life, put it under the tree for them, right? And
Yep.
get them right into that class. Excellent instructors. It's just a great, great program. Sinki, we we don't have any questions in the Q&A right now, but there's some fabulous stuff that you talked about as far as maybe, and I would have to say we got a bear and a bull in the same pasture right now when it comes to the markets. When you're looking at corn, maybe some optimism there. Soybean, not so much optimist there. But going forward, looking at, as we always do, weather conditions in our competitors and in the region, as well as looking that changing fundamental, what's going on with China, right? We know that is decreasing. So where are those other markets that we're pushing towards, as well as just seeing what happens with trade policy, right? So it's going to be an interesting time. I'm sure as we move through into the new year, we'll be coming back and talking more specifically. Any closing thoughts that you have, Sinki, before we wrap her up for today?
Yeah, probably like as my closing comment, I want to mention like even like USDA can be sometimes wrong, and it just admitted and adjust its like predictions like pretty occasionally. So market is like such a dynamic animal, and sometimes it is behaving very mysteriously. So I think so this situation is not really fixed. So whenever I think market is just admitting any shocks, then we will see a whole different stories. Even like in soybean, the situation can get much better. I am not seeing a particular factor now, but who knows? And even like when just a few months ago, we were very pessimistic about the corn, but it has changed pretty dramatically, like just a few during the past few weeks. So we just have to keep an eye on, and with holding some positive minds to survive this tough market year. I think that's kind of my closing remarks for today.
We appreciate you, as always, Sinki, taking your time for this. Just as a reminder to those that are watching that we record this session. It will be on our farm office website, farmoffice.osu.edu. On the top rung of your choices is a bar for grain marketing. If you click on that, you can see a channel right there for Sinki. You'll see, and go on there, you'll be able to rewatch this, maybe share it with a few friends that weren't able to get on this morning. If you have any additional questions there, you can see Sinki's email there on the screen, so you can follow up with him directly if you want to do that. With that, we want to say thank you for everyone for being on today's program. And we hope you have a great holiday season. Thanks, everybody.